as of the recording of this video, Alphabet's shares are now trading under $100 per share. And I believe that that's a huge mistake by investors trading this thing so low. And that's what I'm going to dive into in this video. But first, let me run that intro. What's up, guys, and let's dive right into this one. So you can see here that as of the recording of this video, Alphabet closed at $99 per share, which is absolutely nuts. And the reason why that's nuts is because despite the economic downturn, Alphabet is expected to remain profitable, and thus it's currently trading at 17.6 times their fiscal year 2022 earnings, or what we expect for fiscal year 2022. And why is that 17.6 times earnings so low? Well, they have an average multiple of approximately 26 times earnings over the past 10 years. And so just based on multiple revision alone, the company is worth around 50% more than its current share price. And I'm not saying that it's going to get that whole revision, but even if it were to trade at 22 times earnings or 23 times earnings, which is probably where it should be, that's a huge upside from where the company is currently trading at. And it's not like the company is laying down and taking this potential economic recession lightly. You can see that their CEO has told employees that they're going to become more cost conscious. And so what they're saying is that we shouldn't always equate fun with money. And what that really is speaking to is the fact that the company is going to try to become leaner in this environment. And one of the ways that they're going to become leaner is, this is an article from July, is that they're going to be slowing hiring for the remainder of this year. And the company is going to be focusing exclusively on hiring engineering, technical, and other critical level roles, which will drive the business forward. So guys, they're continuing to invest in the business, rolling out products in these critical areas while keeping an eye on the bottom line. So the company is getting better in this environment, and they're going to emerge from this recession much more profitable with more products and just an overall better Alphabet as a whole. And notice, Alphabet has many areas of growth, including the fast-growing YouTube segment, the cloud segments, and they also have optionality from their other bets segment. So you can see that I'm growing YouTube's at around 25% a year into 2023, and then I'm gradually declining it to 20% in 2024 and then 15% thereafter. And then Google Cloud, I'm growing that at 20% a year into and beyond 2026. And so what does this mean for their valuation? Well, under $100 per share means that this company is trading at approximately 57% of their intrinsic value. And so this is the reason why I'm absolutely going to be looking to add Google or Alphabet into my portfolio over the next couple of days or so. And so I very much believe that you guys should be thinking about this, but it's never investment advice on this channel. If you're not sure, always talk to your investment advisor. Now, I do want to talk about some of the options opportunities, but before I go into that, I just want to point out that approximately 80% of the watch time on this channel is coming from people that are not subscribed. So guys, if you have the opportunity, please consider subscribing to the channel. Now, the first area that I want to talk about is the January 19, 2024 cash secured put. The $90 cash secured put provides you with an 8% annualized yield and a net purchase price of approximately $80.50 per share. I don't think that annualized yield is high enough, and so I wouldn't be interested in that opportunity. However, if you like the idea of buying at $100 per share, but you want a little bit lower of a net purchase price, the $100 cash secured puts provides you with a 13.5% annualized yield with a net purchase price of approximately $86 per share. So if you're not comfortable with buying at $100 per share right now or just under, you can sell that cash secured put and get that net purchase price of $86.50. And if it trades above $100 per share, at least you generate a 13.5% return. Now, in this environment, I actually think it's better to just buy the shares flat out. But if you're looking at the cash secured puts, those are two opportunities that you can consider. Now, the cash secured puts potentially provide you with a better opportunity if you can get a $20 per share premium on the $100 strike price for the cash secured puts, which is not what it's trading at right now. You would have a premium of 15.3%. And a 15.9% total return. So that's something to think about. And I don't think that the other cash secured puts really give you a unique opportunity in this environment. I mean, with the $110 cash secured puts, you're only getting a 10.3% annualized premium. And then the premium only goes lower. So you're better off just owning the shares outright as opposed to selling options in this environment from my perspective. No, I always say on this channel, it's always interesting to look at the options, but you will generally always make the most money by just buying low and selling high with just stocks. And so I do like to look at cash secured puts when I do want a lower net purchase price, but generally when the stock is already cheap, trading at around 50% of its intrinsic value, I'll just buy the stock flat out, and that's likely what I'm going to do in this environment. Now, I do believe that that Alphabet model is very detailed and it's very important for you guys to get access to it. So to get access to that model, you can get access to it at the lower tier of the Patreons, and if you want to join us for an epic conversation or presentation every month, you can join us at that upper tier. Now, Alphabet is not the only cheap name in this environment. Alibaba is trading for about a third of its intrinsic value, and I just recently made a video on it, which you can get to right here.